Hi guys, this video is part 2, looking at taxation. This video we're going to be thinking about some of the principles behind taxation, and we're going to be evaluating different UK taxes. Let's start with the principles of good taxation. We've seen some of the major taxes in the UK, but we need to be able to work out what makes a good tax. When designing a tax system, how do we know what's an effective tax? There are a few key principles to bear in mind when we're thinking about what makes a good tax. Firstly, we want it to have good economy. We want it to be economical. Taxes need to be cheap to collect. If it's more expensive to collect than we get from it, there's no point taxing. It needs to be convenient. Taxes need to be convenient to pay for the taxpayer to minimise avoidance and evasion. Taxes need to be certain. Taxpayers need to know what it is that they're going to pay if they're going to be able to pay it consistently year in and year out, and if we're going to minimise the impacts on their behaviour. Taxes need to be equitable, they need to be fair. This is subjective, as we'll see, and is going to be one of our main lines of evaluation. We want taxes to be efficient. We mean economically efficient. We want them to have minimum side effects. We don't want them to distort markets very much. We want taxes to minimise the negative impact on the market mechanism. Taxes want to be flexible as well, in order to easily change, in order to meet changing circumstances in the macro economy, economic shocks, such as we're seeing now. Overall, we can use these 6 key principles to evaluate different taxes, which we're going to do shortly. These principles enable us to ask the question, how good is a certain tax? Is it economical? Is it convenient, certain? Is it equitable? Is it efficient? Is it flexible? Let's apply these 6 principles by having a think at 3 different real-life tax systems. If you're following along in the handout pack, you'll see these on the sheet. If not, why not write down your answer somewhere else? 3 systems. Firstly, Bulgaria, which has a 10% proportional tax on income. Everybody pays 10%. The United States, which has 7 different federal tax brackets, which are different for 4 different groups, and taxes must be filed by the taxpayer. Or Sweden, which has an average 57% income tax. Take a few minutes to have a think about the different merits of these tax systems based on the principles we've just met. Pause the video and then we'll discuss. Okay, so you've had a bit of a think. Bulgaria's got this 10% system. That has the advantage of being really easy, really certain, so it meets many of the key criteria that we want. It's going to be fairly cheap to collect for that reason. It's going to be quite economical. And we'd hope it to be quite efficient. The downside is that it's not necessarily very equitable. It's not so fair, perhaps, because it's the same for everybody, and we might want a more progressive tax system. Practically, it might not raise enough money for government because we're not taxing the top end so much. The States has a really complex tax system, and the advantage might be that it's equitable, so we could build more fairness into the system by giving different tax bands for different people, but it's hugely complex. It's therefore going to be quite expensive, and it's certainly not convenient for the taxpayer. It's also quite uncertain because just working out how much tax I owe is very complicated. We therefore expect quite high rates of avoidance and evasion in the United States, leading to more expense on the part of the government to try and chase down people who don't pay taxes. Sweden has an average 57% income tax, and I haven't given you details on the fairness of that or how it's distributed, but it is quite progressive. And as we'll see, that has certain advantages. The government raises lots of money which they can spend, but obvious disadvantages. It might not be very efficient. It's going to change behaviour quite a lot. And it also might not be as effective as we'd like in raising money, and we'll think about why that is in a moment. We need to be able to think this way in order to evaluate different tax systems. If we're going to boil what makes a good tax down, in summary, we want it to be fair to different people. We want it to be easy for the government and for people to pay, and we want it to be efficient, minimising the impact on the operation of the market mechanism. One key principle when we're considering tax systems is something called the Laffer Curve. And this enables us to ask the question, how much income tax should we charge as a government? The chap on the left here is Arthur Laffer, who came up with this idea. Well, he didn't, but he popularised it. He was an advisor to Reagan in the 1980s. In 1974, he really popularised this idea in a meeting with Dick Cheney, talking about different tax systems. And he argued that if income tax rises, sometimes tax revenues actually fall. And the logic is that if tax is too high, it actually disincentivises work. It's quite a straightforward idea. Suppose we've got tax revenues on one axis and the tax rate on the other. Obviously, if our tax rate is 0%, we'll raise no tax revenues. But also, if our tax rate were 100% of income, we'd also raise no tax revenues. Because if all of your income goes to the government, you're not going to work very much. So Laffer argued that there had to be a curve going between these 2 points that would have its peak at some point. After this point, the impacts on people working less outweigh the gain in tax. And that means we can evaluate different tax systems by arguing that sometimes more tax is not going to have a positive impact on the economy or the government. In practice, this isn't a very useful model because all economists agree that this is true, but you can argue for almost any tax system depending on where you assume that peak is. Some economists will say that the peak is maybe 90-95%, whereas more right-wing economists might argue that it's as low as 20%. It's kind of hard to work out what's actually going on in the data, and so the Laffer Curve is a really good piece of evaluation, but I don't think it's a great economic theory. You could say he was having a Laffer. Let's move on. So we've seen some of the principles of taxation. Let's apply that to evaluate some UK taxes. 3 key areas. We need to be able to outline the roles and merits of various UK taxes. Let's start with taxes on income, direct taxes. We've seen that personal income tax on consumers, is the most important UK tax. From the chart we looked at in the last video, we saw that the UK government planned to raise £208 billion in 2020 from income tax. It's really cheap to collect and very convenient for the government. It's usually raised direct from employees' income using a pay-as-you-earn system. So most employees in this country never have to worry about income tax, it's deducted automatically. It's also arguably quite equitable. It's a progressive system. We've seen the different tax bands. The downsides are that it's relatively easy to evade, which is illegal. That means illegally shirking away from tax. So for example, if I were a plumber or a handyman, if I received my payments for my jobs in cash, I might never need to declare my income, and that would mean I can evade tax. Similarly, it's easy to avoid. Now, avoidance of tax isn't illegal, but obviously it's discouraged, and an ideal tax is going to minimise avoidance. So for example, particularly rich earners often end up moving their incomes through foreign countries in order to minimise how much UK tax they pay. Direct taxes have pros and cons. It also risks, as we've seen, disincentivising work if it's too high, and that means these direct taxes might not be economically efficient. So think of Sweden's 57% income tax. It risks not being efficient because it means that market behaviour is distorted. Taxes on spending, these are our indirect taxes, so VAT and excise duties, and these are the second most significant group after income tax. VAT is what we call an ad valorem tax. It's a fixed percentage of the sale price, it's 20%. Whereas excise duties are usually specific or unit taxes. It's a fixed amount per unit. So regardless of what the price of petrol is, for instance, the tax paid per litre is the same. Now these are really good because they're good at correcting market failures, as we've seen, particularly these excise duties. We can use them to influence consumer behaviour. The problem is they're usually regressive, so they're not necessarily a very equitable way of raising tax revenue. It's possible to evade them. So for instance, you often get workers using just cash transactions so they don't have to declare them. But it's usually less easy to evade than with direct tax. You can usually spot when incomes are misrepresenting when firms are misrepresenting their income. Lastly, we've got some taxes on capital and wealth. These are direct taxes. We're thinking things like capital gains tax, which is the tax I have to pay on returns to investment, and inheritance tax when property is transferred from one generation to the other in the event of a death. These are pretty costly to regulate. In practice, they're fairly easy to evade and avoid, just because HMRC, Her Majesty's Revenue and Customs, who regulate taxes, don't always have the resources to do anything about it. In summary, here's our key point. When we're comparing taxes, we want to start with our 6 key principles of taxation. But bear in mind that the impact of taxes is subjective to an extent. That's particularly because of equality. working out how important it is that a tax is equitable and what it means that a tax is equitable is up for debate. So we've thought about the principles of taxation and we've evaluated different UK taxes. All that remains is to have a think about how this applies in the exam. So let me leave you with 3 questions. We might need to explain how taxation can affect an economy, or explain the impacts of different types of taxes, perhaps indirect or direct taxes. A couple of years ago, there was a really nasty 25-mark essay question. Evaluate the view that direct taxation is usually preferable to indirect taxation. Down the line, we'll have a think about how we might answer that. But usually tax questions come up in conjunction with our other objectives. But we do need to have an idea of the specific impacts of different taxes, which hopefully you've got after watching this video.